Hello and welcome back. I'm Nakvi from Vision Realty, and today I'm going to update you about February 2022 real estate market update. Hello and welcome back. I'm Nakvi from Vision Realty, and today I'm going to update you about February 2022. The market activity has been extremely busy in the last 2-3 months, especially in January and February. If you compare to February 2021, the number of transactions sold were 10,929 in February last year, and this year it was 9,097. That's almost a 16.8% drop year over year. Number of listings in last year, 2022, February was 15,146. That dropped minus 6% to this year was 14,147. That's not a huge jump, but again, it was the number of properties were less, and that's the reason the number of transactions were less as well. But the price went up because of the shortage in inventory and the huge demand. Last year, the selling price was 1,044,000, and this year in February, the average home sold for 1,334,000. That's a jump of 27.7% year over year. And what that translates to number of days, it took less number of days. Last year was taking 19 days to sell a property. This year took 11 days in February to sell a property. So I have a number of points that I want to share with you guys about everything that's connected to real estate. There are a lot of things that happen, and on the top of that is the interest rate that went up. So in March 2020, Bank of Canada drastically dropped the interest rate to 0.25, and that continued on with their quantitative easing policy of throwing in more money in the market. They were buying bonds at a higher price and then selling them at a lower price, and what that meant was there was a lot of liquid cash in the market. With the interest rate jump, even though it's a 0.25%, but there is another policy which was announced by Bank of Canada on Friday, which was quantitative tightening, which is the reverse side of quantitative easing. What they will try to do is to reduce the amount of money that's floating in the market. They would be consistently increasing the interest rate. That's highly expected that there would be a few more interest hikes again in the next few months. There's one in April, then another one is I believe in May or so, and they would be increasing the rates. And how that would this is directly going to affect the buyers who are in the market, who are planning to purchase, because their affordability would be dropping with each increment in the rate increases. But it also affects those new buyers who are just buying or who just buying now, that they would be getting a less number of their affordability bracket would drop a bit. Borrowers will see some extra portion of payments going towards their interest. Based on a recent study, Canadian mortgage borrowers still in the market aren't worried about higher interest rates, so the consumer confidence is very high, and that's what drives the economy, and that's what was driving the economy. In November 2000, when the vaccine was announced, that was the pivot, and that was the shift and change in the market when consumer decided that this is it, like the vaccine is out and everything will be normal. But still, it's 2 years now almost, and then we are still struggling towards different variants. But that was consumer confidence which was driving the market, where people were buying homes and that prices were going up steadily, because consumers were aware that if this continues, then the price would continue to go up, and that's where people were trying to get into homeownership sooner. Before the interest rate was announced, I would say even a week before, there was a sudden shift in the market, and then the buyers were expecting the interest rate to go up, and there was and also because the multiple offers were exceedingly going crazy. There are a lot of buyers who are holding on, and that now seems to be now translating into less number of sales, and a lot of agents who were realtors who were putting properties in the market $200,000 to $500,000 below what they are actually sold recently are seeing that the properties are not selling. This is what is happening on the ground, and they are canceling the listing and the relisting at a market higher than the market value. So you would be seeing a lot more of that going forward, because before the sellers mindset adjusts to that situation, that the market has shifted a bit, then you would see the changes, and then the prices, and then the multiple offers, changing as well. So the consumer confidence, if that continues, then you would see like a peak or continue to see a steady market or steady sale during spring market. But if the interest rate keeps going up, then you would see a bit of a slowdown for at least for the time being. National rental rates went up 3% since last year. Vacancies are still steadily the same because so the expectation that new immigrants will be coming in is still there, and that's the reason you see that all this speculation of investors jumping into any kind of properties, doesn't matter GTA or Greater Horseshoe or even in Calgary for that instance. Business News Network recently came up. Recently posted news about a study that 42% of homeowners have tenants living in part of their homes in the basement or as room sharing, and they have not disclosed this to the insurer. This is a serious issue with serious financial implications. But again, this is what is happening. 42%. That's a big number. Another recent study is that 19% of recent buyers are multiple property owners. So the market activity in different cities I've been posting for the past few years, where for all the GTA cities. But from today on, from this video onwards, I'm not going to post all. You have the data on Investimate Easy, and then you can get all the details there for your city. And just in a quick minute, you can. This is a curated data you won't find any other place. And so today I'm going to give you the top 5 and then bottom 5. So this is about in different cities, properties sell, and then there is some price gain and then price drop. So the rate and prices are different. So we'll see like where the prices have gone up and down last month. So from the top bracket, you have Brock. The Brock was selling at $647,000 last year, and the price have gone up 47%. So now the properties are selling at $1,168,000. And next is King City at 34%. Last year was selling $2,110,000, and now it's like $3,200,000. Last month there was King City was at the bottom at -4 or 5%, I believe, and that was because King City has the most priciest properties in GTA, and if there's any property which is $4 or $5 million and then it sells, that actually throws up the whole stats numbers. So that's that's the reason here. Last year in Skugog, $990,000 was the average price. This year it was 1.48 million. So that's 33% jump, and then right after that is Uxbridge at 31%. Last year it was 1,089,000, and this year average price is 1,589,000. And Oshawa was selling at 768,000 last year, and this year is like 1,100,000. That's a 30% jump year over year. And Oshawa prices were, if you go from east to west spanning, that was the cheapest prices. So at the bottom is Halton Hills at 20%. Last year it was 1,117,000. This year average price is 1,394,000. Then Mississauga was selling at 991,000 last year, and now it's this year it was 1,223,000. That's a 19% change year over year. And then right after that is Oakville at 1,457,000, and this year the average property was selling for 1,776,000. That's an 18% jump year over year. And right after that is Richmond Hill. The average price was 1,274,000, and this year average price selling was 1,549,000. That's an 18% jump. Last and the last of the price difference is Toronto at 1,144,000 last year versus this year the prices were 1,382,000. That's 17% change year over year. Again, there are a lot of variables, and then as mentioned earlier, these changes are comprising of all property types. That's detached, semi-detached, townhouses, condos. So any property which sells, on an average. So this is an average of all the properties. So if you are looking for any specific subdivision or any specific type, you can reach out to me. I can give you the details. So that's about it, and for the numbers are concerned. watch out for the interest rates, and those who have bought in the last couple of months, it'll probably take maybe a year or 2 years for you to really see value in your homes going up. But it seems at this point that the peak has been reached. Those buyers who were in the market, this is your time to get in. It's getting there, and definitely you would be seeing a lot more opportunities, less of multiple offers, and more realistic prices. But I don't see the blind bids going anywhere soon unless the government comes up with some regulations. So that's it for now. Thank you for watching, and see you in the next one.